I had the pleasure of interviewing Kevin Davey, who is a verified futures trading champion for multiple years from 2006 to 2008. He returned over 100% in trading net returns, and one of those years he came first place, and the other two he came second place. In this interview, you're going to learn about how he got started trading, his kind of process of building great automated trading strategies, and the technology he uses. I think you're going to find a ton of value in this, so grab your popcorn and enjoy.
All right.
Okay, so thanks so much, Kevin, for hopping on with me and showcasing your story and doing this interview. So I really appreciate your time. If you guys didn't know, I'm here with Kevin Davey, champion trader Kevin Davey, and he's a automated trading system developer and trades his own automated systems and does very well for himself. So Kevin, I wanted to kind of dive into more like where you came from, how you got into trading, and more specifically automated trading, and kind of your story.
Okay. Well, thanks, Jacob. Thanks for having me here today. My story started probably right when I was out of college. So this is back a while ago now, but it was like the late 80s. And I remember I was working my first job. I was out of college and I was working in engineering. And the thing about engineering is you tend to get real good salaries right out the door compared to a lot of other majors. But usually like the room for growth isn't as much as some other majors are. So what happened was probably like 3 to 6 months after I started, I was like, oh, is this all there is? You know, you spend all that time in school and you start to think, well, there's got to be something more. And just around that time, I got a piece of advertising in the mail. And this was, back when everything was sent US mail or, Canadian Post kind of thing. And it was this big pamphlet about how you could have traded sugar years ago and made $1 million real easily because sugar had this huge uptrend. And, I was hooked. I mean, I saw that and I was like, ooh, and there's a course and it's talked about chart patterns, like head and shoulders and 1, 2, 3 patterns. And so I gave it a try and it turned out that particular course didn't work. I actually got my money back on it, which was surprising. But after that point, I was just kind of hooked of trading and the potential, especially for futures, where you can be leveraged. And because I didn't have a lot of money at the time, and to put together a $5,000 account when you're just out of college is a lot. So I started doing that and started going down the road of developing systems. And most of it I started out with discretionary trading, looking at a chart and saying, oh, this looks like this pattern, I'm going to buy, and not really having full rules. And over time, that didn't work, of course. I became more systematic, more of what we call now algo trading. Back then it was called system trading or mechanical trading. And it just kind of went from there. And that's really, once I started doing that almost primarily, or nothing but that, that's when I started to have some trading success. And then I just kind of kept doing it up until today.
And you sort of kind of, obviously you had a job and you traded at the same time. So you kind of had to balance that. And how was that like? How was, going to your job from 9 to 5 and then coming back and checking your trading? Like back then, obviously, platforms weren't as sophisticated as they are now with, TradeStation, IndiTrader.
Right.
So how did you balance that?
Well, what I'd end up doing was I would call the broker, because this was before you even had internet access to your accounts, really. And I'd call a broker at lunch and get a quote. They'd have automated quote and telephone lines, or if I had to place an order, it was during lunch, because obviously I couldn't really do it during working hours. I also tried to tailor my systems around just placing orders right at the open. But back then it was so weird because they were starting this transition from pit trading to electronic trading. So you had things like wheat, where they had a pit session that was like 10:30 to 2:30, and then there'd be no trading, but then there'd be a Globex, what they called Globex at the time, session at night. And so you could trade there too. And I kind of stayed away from that for a while. So it was tricky at first because you really couldn't do too much. But the flip side to it was it was hard to overtrade because you couldn't be sitting there while you're working and maybe have a laptop on the side where you're trading. So
Yeah.
it probably turned out to be a good thing that the electronic access wasn't there. And then as time went on, we were able to do that. You could trade from work if your work allows it, kind of thing. But
Yeah.
I always stayed away from that because I'm like, this is more my hobby. I got to protect my work, full time, because that's where the money is still coming from primarily. And I ended up creating systems that just would trade the open or that kind of thing, where I didn't necessarily have stops in during the day because I didn't want to have to check to see if they were hit and that kind of thing. So
Mhm.
it was kind of a definitely a lot trickier, but it was definitely doable.
Right on. That's cool. And you started sort of late, I want to say late 90s, early 2000s. Is that when you started trading?
Um, it was probably actually the first futures trade I took was probably in the early 90s. And but I really started to get into it more the mid to late 90s. And but I was still having a lot of issues with failures, and I was trying all different kinds of approaches. I was trying
Mhm.
systems, but they were, they really weren't back tested too well. And um, it was probably the early 2000s that I really started to, you know, study and get super serious about it. I think I was
Mhm.
kind of playing more before that. It was an expensive way to play, but eventually it kind of led me where I kind of learned things to do things the right way. So it all kind of worked out.
That's cool. And if you recall, what obviously I'm pretty sure TradeStation wasn't a thing back then. What broker did you start with and start using?
I used a bunch. I remember Lynn Waldock was one of my primary brokers, and they eventually went under. I also had an account with MF Global. They went under. Um, so it was a lot of failed brokerages. Actually, with
Yeah.
Lynn Waldock, I was one of their beta testers for their online platform, where
Cool.
it was like a web base where you could place orders. And I remember the one thing I remember about it is they didn't even have a secure website. So it wasn't like HTTPS. It was
Yeah.
HTTP Lynn Waldock something. And I was talking to him and I said, how can you not be secure? And they were like, well, what do you mean? Why would we have to be secure? I mean, that's how naive people were back then
Yeah.
when it all started. I didn't start with TradeStation until about, I think, 2003 or 2004. And
Oh.
before that, I was kind of, I developed my own back testing because I had some computing programming experience.
Mhm.
So I kind of built my own back tester, but eventually I was like, wow, I got to use TradeStation. And I believe at first, they didn't even connect where you could automate your trading. I know I did a couple systems where it would just do end of day signals and then I would manually go and enter it, but it was still an algo, but it just
Mhm.
wasn't automated. So I've kind of, a lot of my trading grew up as the industry transitioned, from all the
Yeah.
calling in and doing the pit trading and having to deal with fills that weren't filled and missed things and wrong prices. And then it went electronic and things got a whole lot better. So yeah, I was kind of along the ride for most of that.
Yeah. I love to really dig deep on what technologies you started with because right now it's so easy to get into automated trading and algo trading. We have countless platforms. I mean, they're coming by the dozens now of easily writing code, and now you can automate systems with a couple of clicks. You don't have to write any code. There's user interfaces on the web. I mean, you could be on your iPhone and develop a automated trading system and run it. So I think we need to appreciate the amount of work these companies have obviously invested in building these platforms, and kind of where you started, like having to call to order, to enter a futures contract just seems so archaic, but we
Yeah.
take it for granted a lot. So I think that's why I like to harp on those things. That sounds awesome. That's cool. Now let's kind of take a step back. Automated algo trading. If I were to explain it to the average person, I would say basically you're telling a computer to make trading decisions. Would you agree with that, or would you kind of, what would your definition be of algo trading or automated trading?
Um, that's pretty close to what I'd say. I would say you have some computer code that you create that tells you or tells somebody when to buy and sell a
Mhm.
certain instrument, a certain futures market, Forex, whatever it is. So you create that the rules for that, and you program it, and then you just run it in a trading platform. And then the automated part would be it runs automatically, and it just could be in the middle of the night. You don't necessarily have to be sitting in front of the computer, and it could be buying and selling. So it's really just rules. And algos just rules to trade by. Most of the time it's computerized, but hey, they could be written down. You could have rules that are written down, and you, if, as long as you follow them, that's an algo. And then the automated part would just be you have a some kind of trading platform or some kind of software that will automatically send those signals to a broker, and then they'll get executed.
Perfect. And the reason why I like it, and kind of why I started manual trading probably about 6 years ago, and I wouldn't say trading, just buying and holding common stocks. But the reason why I like it, and I'm sure why you like it, is that I came from a software development background, so automating things interests me, right? It's interesting because it makes my life, I would say, more productive. So if I can automate systems, I feel like I'm more productive in a way, and
Mm-hmm.
also the benefit of not looking at charts all day and trying to eliminate human error. Now that's still, you know, I wouldn't say 100% possible with automated trading. You might make mistakes once in a while, but I think those are the main benefits. Is there any others you can kind of think of over, say, manual day trading, discretionary trading, as you call it?
Well, another big thing is your emotions. Some people mistakenly think that if you algo trade and you automate your trading, that your emotions don't matter. And that's not true, because as long as you're trading with money, real money on the line, you're going to be emotional. That's a given. But when you run these algos, especially if you run a few different ones, like a portfolio of them, what ends up happening is you don't get the emotions, the stress of, oh, should I take this trade or should I get out early, or that kind of thing. Uh, because you're going to let the algos, ideally what you want to do is you're going to let the algos take over, and you're just going to trust what they do.
Mhm.
Now, the emotional part is it's hard to get the confidence in those algos to actually say, "Ooh, yeah, I can step away. There's a Fed meeting coming up today, and maybe my algo will do something. I'm okay with it." That doesn't happen overnight. A lot of people get scared of that, and then they overrule their algos, which kind of defeats the purpose. But
Mhm.
uh, that's one of the, I think, nice things about it. It doesn't eliminate your emotions, but it kind of changes them a little bit. And for me, it's easier. I don't have to worry about, oh, is this the right price to enter at, or is this the right time to get out? Well, I follow the rules. If the rules, or the computer follows the rules, and if it says get out, it'll get out. And
Mhm.
over the long run, that turns out to be a calmer way, I think, of trading.
Yeah, absolutely. I think that's one of the main benefits. And, I just really want to double down on the emotion part because, with my trading systems, even though they're fully automated, right, there's still emotion because it's with your money, right? And when you see
Right.
the P&Ls change, and, it can affect you, especially if, you have multiple systems, and say you have five systems and three of them are maybe in a red position, it still affects you, even though it's automated. Um, that you can't really fix that emotion part. Obviously, there's position sizing, and maybe you need to lower your position sizing. Maybe it's your risk tolerance just isn't there yet. But there's still emotions even with automated trading. And I
Yeah.
think the internet likes to market, these trading bots and automated trading systems as, set it and forget it, no emotions. But that's not true. If your money's still on the line,
Yeah.
you still feel it.
Yeah, it's crazy that like probably about 5 years ago, that was really big with like MT4, MetaTrader 4, where all these people were offering these expert advisors, and their big claim was, oh, you just let it run and you don't even have to check it. You have no emotions, you just come back in a month or whatever and count your riches, like, and but people fall for it, and that's the sad thing.
Yeah.
It's just not true. But uh, the emotion part, that's still a huge part of trading, and no
Mm-hmm.
matter which way you trade, you can't get away from it.
Yeah. Great. So, let's go back to your story. You started saying that you started using TradeStation around 2003. A couple years have passed. Maybe you've been trading for 5, 6 years. You're getting better. You're putting in better steps to building great trading systems. You're looking at things like, you're learning how to back test, how to test out of sample. And there was actually a couple years where you entered a contest.
Hmm.
And could you kind of explain that contest, to say someone that's watching right now that isn't aware that this trading contest?
Okay, sure. There's a trading contest out there. It's pretty famous. It's called the World Cup of Futures Trading Championship. And a lot of people might recognize the contest because in the early 80s, trading legend Larry Williams took a $10,000 account to over 1.1 million in a year. And that was
Crazy.
real time, real money, a year-long contest. And so that was the uh, event that really brought this contest to light. And so they have a yearly contest. Now they actually have a few different contests, but back when I did it, they'd have a yearly futures contest. I believe I don't remember if the starting amount was 10,000 or if they for a while they changed it to 15,000. But you had to open an account with that broker and trade through them, and then they would monitor it and uh, tell you who the winner was at the end of the year. And so what happened was, originally, this was 2004. I was going to enter it and I didn't, but I kind of followed it like as if I was trading it, and
Mhm.
in my real accounts that were just outside of that broker. And I would have actually won that year. And that, you know, of course, everybody says that. Oh yeah, well, if I'd done it, I'd won. I would have won.
Yeah.
But I felt confident enough that I said, okay, well then I'm going to try it. And then so I did it 3 consecutive years: 2005, six, and seven. And 2005 I finished in second. 2007 I finished in second. And then in between, in 2006, I actually finished in first place. All those years was over 100% return. Uh, and so that those 3 years of performance really kind of convinced me that, hey, I'm on to something the way I'm doing it. Yeah, I'm not perfect. Uh, and even today, I don't think like what I'm doing is perfect. I can't make money every day. I don't think
Mhm.
anyone can unless they're like a hedge fund, a high frequency hedge fund. But it gave me enough confidence to kind of see a light at the end of the tunnel saying, hey, this is what I love to do. This was my hobby. So, some people do woodworking, some people now fly drones or play sports, or, I was basically sitting in front of the computer in my free time building trading systems. And so the light at the end of the tunnel was I started to think, hey, I might be able to do this full time, because that's what I really love. I liked what I was doing in my day job. I was in charge of quality assurance and engineering for a aircraft part manufacturing firm, but it wasn't the same passion that I felt for trading. Like, that's how you like it, when you want to do something and not get paid for it, like a hobby.
Yep.
Um, and that was my hobby. And so 2005 to 7, I had that good performance in the contest, and that was kind of what pushed me. And then in 2000, I believe it was 2008, I had an opportunity to leave my job with uh, like a good package because of we were bought out by a big company. And it was kind of neat because it was actually like they had told me when the new company came in, they said, well, if you stay a year from today, we'll do this for you. And I remember I literally went home that night and asked my wife, I said, do you care if a year from today I quit my job and start trading? And
Mhm.
she's like, yeah, sure. Which, you know, having spousal support or significant other support is huge for
Yep.
people who want to trade. She was behind me all the way, even though she didn't really know, you know,
What
the
was going
days
on?
when I get killed, even today, she doesn't know.
Mhm.
And if she did, she'd probably freak out. But, that turned out to be a big thing. And so then I think it was 2008 is when I started doing full-time trading. And ever since then, that's kind of what I've been doing.
That's incredible. Yeah, too. I mean, to even just going back to the contest, like 100% years are very hard to do. They're not, even to do them back to back is insane. I mean, if you were at that time running your own fund and able to do that, a lot of people might line up to trade their money. So that's really cool. And that's insane. And I guess that opportunity of, with your job in that package was sort of like a stepping stone. And that's something I really want to dive into because, when it comes to trading, you need to, as you mentioned, treat it as a business as well, right? If you want to
Right.
grow and be successful, you got to treat it like a business. And a lot of people want to trade full time. But one of the major hurdles, I think, of trading full time is the capital requirement. Like you need quite a bit of cash to sustain yourself, right? So
Yeah.
that opportunity was, I'm sure, was perfect for you. Um, when it comes to like treating trading as a business, what are not everyone runs a business, right? So like what are some of the things that you need to think about when you're trading or you're treating it as a business in terms of being like setting yourself up for success in the future?
Yeah. Well, the first thing you already mentioned is having enough capital. That's huge because you're going to have drawdowns and you've got to be able to withstand those. Another thing that I found was a big part of success is you really don't want to draw money from your trading account to pay for living expenses. Uh, and the reason why is because let's say you have a down month and so you're already feeling pretty bad because you lost money trading, which is not uncommon, over a month period. You're not going to make money every month necessarily. And then, you have to take out X number of dollars to pay your living expenses. So now, in effect, your drawdown becomes bigger because you're draining your account. So the way when I did it, what I did was I actually set up, I believe it was like 2 years of living expenses. And I put that just aside from my trading money. And I said, okay, even if I blow my trading account completely, okay, I'll go back, find another job or something, but I've got 2 years of living expenses. So I'm covered. And that was a huge relief, because at the time, I think I had like a 1 or 2 year old and I think a baby just on the way or already. So I had two little kids. And, the last thing I wanted to do was like jeopardize, that they wouldn't have somewhere to live kind of thing or food to eat.
Yeah.
So I did a lot of planning for, worst case of, not making money. And I think a lot of people who go into this who want to do it full time go in with the dollar signs in their eyes and, oh, this is how much money I'm going to make. Where I was more probably focused on the downside of what if things don't work out? Am I going to be able to recover? And I think that's important. The other thing to realize too, trading is just really tough, partly because the returns are so lumpy, where I've literally had years where I've traded where the first 8 or 9 months of the year were break even at best. But then maybe the last 2 or 3 months, I made a year's worth of profits. Um, and then some years I don't even make that year's worth of profits. And so sometimes you have lean times, and then you have times like, uh, for me personally, now like 2022 has been a banner year. Uh, 2020 with COVID, that was another great year. But
Yep.
like last year was kind of so. It wasn't nearly as good. So
Hmm.
you've got to kind of temper, where you might have good performance one year and so performance the next year. And you hope it balances out. But a lot of people don't do that. They assume, hey, they start making all this money and they assume it's going to last forever.
Hmm.
Oh, I figured out the markets, I'm doing great now. And yep, I don't have to worry. This is going to keep on going. And it
Yeah.
would be nice if it did, but usually what I've found after doing it so many years is, hey, there's peaks and there's valleys, and you've
Yeah.
just got to be prepared for both.
Yeah. I find that personally, days that I make money or weeks or months that I make money, I feel like I'm on top of the world. I'm the smartest person. No one can stop me. And days that I lose money or months that I lose money, I feel like I'm the stupidest person ever. Like, how could I do this? How could I lose this money? And it's just part of the process. And it's like running a business too. Running a business, there's peaks and valleys, right? There's
Yeah.
not always highs, right? So sometimes you got to go through the lows, and it's just a day by day basis. And I think sticking to a process, sticking to a routine and enjoying the process is what matters the most. If you enjoy it, I think you'll make more decisions to be successful. Where if you don't enjoy it, you're probably going to stop at some point.
Right. Right. And
Yeah.
I think that's what happens with most people is they just kind of give up. You've got to really be persistent with this, and just have the staying power, because it's going to uh, be tough at times, and that's just part of it. And yeah,
Mm-hmm.
you don't think that going into it. You just think about how easy it's going to be. Everybody's been through that, where you run your first optimized back test and you see how great it looks, and
Mm-hmm.
like, oh man, money's just going to fall into my account. And then you start doing it and you realize, oh no, that doesn't really happen. But I get emails all the time from people who, their goal is, oh well, I want to double my money every week or every month. And I'm just like, well, you need to calibrate yourself. And that, going back to the having a business of trading, you need to have some realistic expectations to start with. Because if
Yep.
you're unrealistic to start, you're just going to fail. You're going to make bad decisions right off the bat. So that's another part of it too.
Absolutely. So I know we've talked about a lot of the kind of not really the inside stuff about automated trading. So, in your massive experience now trading for quite some time, you've sort of built a system, what you call the strategy factory, which we'll talk about more at the end too. But what are what are your best practices for automated trading? Your steps and what process have you built to help you, you know, set yourself up for success? Obviously, there's no guarantee, but kind of what systems are in place to help you potentially achieve that success in the future with automated systems?
Okay. Yeah. The big thing for me was I realized as I was starting to develop strategies and, have some limited success, but probably more failure than success. I started to realize I was just doing a lot of things wrong. I was optimizing with too many variables, for example. My systems were too complicated, things like that. So what I started to do is I started to get smarter with this. I said, I need to really have a process of building strategies that's consistent
Mm-hmm.
and it's repeatable and it's objective. So, because so many people, myself included, you'd read about a system on the internet or in a book, and you think, wow, this is great. I'm going to start trading it. And you don't test it at all. You don't evaluate. You just take the word of the author and go and do it. But other systems you test to death, where you keep retesting and tweaking it and doing all this stuff. Well, both of those things are bad. And a lot of people do them. But so what I ended up doing was coming up with a step-by-step process that takes you from goals, where you want to be with a strategy or as a trader, what kind of returns you want. And it's just a bunch of different steps. And the reason I call it a strategy factory is because it's actually, I liken it to making some kind of object, something in a factory. So pretend you're making watches, for example. Well, you're going to have a whole bunch of machines that are going to work on metal and, create the little gears for the watch and the hands and, all that stuff. And you're going to go through step by step. And what's going to come in the door to start is going to be, raw material, your metal, maybe some plastic, that kind of stuff. And then you do all these steps, and what goes out the door is a finished watch. And it's the same way with building strategies, where your ideas are what's your raw material. So you need ideas for strategies. Oh, okay, I want a breakout strategy. I want a moving average crossover. I want a mean reversion. Okay. And then you put that idea to work, or you test it on different tests. Those are the machines in the factory. And then what comes out the door is a strategy that's been fully tested, that meets all the requirements, passes all the tests. There's like, at every phase of the process, every step, there's a pass fail criteria. Yes, this is a good strategy. Nope, throw this away. So you end up with a pile of good strategies, hopefully, but what you really end up with is a whole pile of scrap of terrible ideas, things that didn't work, because most stuff doesn't work. And that's one thing people don't realize when they go in to build their own strategies or evaluate. Most things don't work, especially when you consider slippage and commission, especially slippage. That's a real cost. It's that's the cost of doing business, of entering the market and exiting. And moving average system, for example, if you didn't have trading costs, those would work great in most cases. But as soon as you have those real world costs, then that kind of falls apart and it doesn't make money. So it ends up being this factory where you're just pushing through ideas and testing them. And once in a while, something good comes out. And then that's something you can trade. And what I found is when you consistently apply the rules, you treat every strategy the same as far as what you're doing to it. What you end up with is almost like a commodity at the end, a strategy, strategy A, strategy B, and C, and they all should perform about the same relative to their historical testing. And you can sort of, not all the time, but a lot of times you can rely on that, or at least it kind of puts the odds in your favor. They always say past performance is not indicative of future results, which is absolutely true. But the reason we back test and historically tested is because what I've found is you can skew the odds a little bit in your favor by doing things correctly. And yeah, you could still get unlucky and get into a big drawdown, but if you trade enough systems, do it for long enough, you should come out on top. That's at least how I've set it up.
That's great. And yeah, this factory that you develop, this process you develop, helps you sort of filter out the bad strategies, right? The common strategies everyone thinks about, SMA crossover, does it work or not? Let's test it. Let's put it through the factory. Does this MACD strategy do well? Let's go it through the factory. And usually the bad systems will fail, but you develop this process where, correct me if I'm wrong, but you can sort of take an idea, put it into the factory, and out comes either junk or a good strategy, right? And you just want to be able to filter out the junk and take all the good strategies and combine them together and to have, some each strategy is essentially a product, right?
Yeah. Yeah. It's a great way to put it.
Perfect. Awesome. And if you could talk about sort of, I don't want to dive too in deep into the factory, but what are the six main steps of the factory that you kind of developed?
Okay. Well, first you start out, like I said, you have to have goals and objectives. That's people don't think, oh, that's important. A lot of people don't think it's important. A lot of people don't set goals, but that's huge, because if you go in with the expectations, like I talked before, of doubling your money every week, you're never going to be able to build a strategy. So you got to have realistic goals. So that's the first step. Then you've got to have your trading ideas, and that isn't necessarily a step you have to do for every strategy. It's more of a overall thing where you just want to create a stockpile of ideas so you always have raw material to test.
Mm-hmm.
Then you go through and you do what's called what I call preliminary testing.
Mm-hmm.
And the reason I do it is you test on a little period of data. And usually that tells you enough that you don't have to waste your time with a whole bunch more testing.
Mm-hmm.
The worst thing is to go through all this walk forward testing and Monte Carlo simulation only to find the strategy was no good to begin with. So what I've found is you run a test on a couple of years of data, and there's certain criteria, but it is a good indicator that the strategy might be okay. But what it really does is it gets rid of a ton of garbage.
Yeah.
You could think of it in a factory as if you're testing metal, make sure the metal meets all your specs before you go and try to make watches with it. So that's a great test. Then we go on, we do optimization I use walk forward testing to do out of sample testing. That's like the major test. Then I do some Monte Carlo simulation, which is kind of like a random simulation that helps you figure out some probabilities of drawdowns, probabilities of risk of ruin, that kind of thing. And then I also have a step for watching the strategy live for a while. Now, this is a little tricky because if you've created the strategy incorrectly, or if it's something unrealistic, that step isn't really going to help you. But when you do it correctly, when you build your strategy correctly, this step saves you money, because everybody who's ever built a system probably has had this experience where it's Sunday night and you're building your little algo and it works, and you say, oh, tomorrow morning I'm going to start trading it live. That is like the worst thing to do. And
Yeah.
it's funny
Been
because
there.
I've done it too.
Yep.
And I survey students who take my class, and I say, that step, does that save you money? And every time I ask people, it's always like 85 to 90% of them say, oh yeah, that has definitely saved me money. It's really hard to do though, because you have to have the discipline to say, oh, I just built this really cool strategy, but I'm going to put it on a shelf for a few months and see what
Mm-hmm.
happens to it. And, because in your mind, you're like, oh, I'm giving up all this profit that I'm not trading it. But turns out that's a great thing to do. And then, once it gets through that test, then you have to look at your position sizing, your diversification, make sure that this strategy is uncorrelated with your other strategies. And then you kind of put it into, production as far as being one of the strategies you trade in your portfolio. So it might sound a little complicated with all these steps, but when you break it down, each step is pretty straightforward, has pretty simple yes or no criteria for the most part. There's not a lot of what I'd call discretion in saying, well, this one's sort of good, so I'm going to keep using it. It's usually, nope, it's no good, throw it out.
Mm-hmm.
And that helps with your discipline. it also helps when you have this process because you start to have confidence once you start getting some strategies that work. You say, wow, this actually works. And then that reinforces that, yeah, I got to follow the rules because it's been proven that it works if I do this. So it kind of becomes a self-fulfilling type thing where, yeah, you do it and then you get good results and then you want to keep doing it.
Awesome. That's a really great explanation. I think most of my viewers, especially the newer, algo traders and newer people onto the scene, think that, in a couple lines of code, you can build a great trading strategy just because it's automated and just because it's in code, it's going to perform really well. But it's much harder than that because you need to think like a trader as well. You need to, think about, all right, like let's test this strategy. How did it perform in the past? And, how can I do, different techniques and different processes to ensure that maybe it performs well in different years and out of sample and stuff like that. So that's really cool that, it probably took you, many, many years to develop this process of just
Mm-hmm.
hardships, right? There was probably
Yeah.
times where, it was hard, you probably weren't making money and you were like, man, like, how do I get out of this? So I think having that discipline for following the steps to this factory just helps with your overall trading and really filter out or build the discipline and build the process to set yourself up for success in the future. So that's great.
Yeah. It definitely helps you avoid some of the more common mistakes because there's so many ways to build an algo incorrectly.
Mm-hmm.
And most people, unfortunately, don't even realize it. And a lot of it comes down to trading software. I use TradeStation, but I have NinjaTrader, I have multi-charts. They're all the same basically, where, hey, you put a chart up, you insert a strategy, and then usually there's a window where you can optimize things. And
Mm-hmm.
it never says, hey, watch out, optimization is really dangerous. It just says, oh, here you can optimize it. And what would most people,
Yeah.
oh, you optimize it. And then you look in a result pops up and it's this great looking equity curve. And you're like, oh, I'm a genius. I just did this.
Yeah.
This looks great. And nobody, most people don't realize that that's all fakery.
Mm-hmm.
The result's real, but it will almost never work the same going forward. Um,
Yep.
I used to have this problem. It's kind of a related thing, but with some of my early investing I used to get, I don't even know if these magazines exist. I think they do. Money Magazine, Kiplinger's Personal Finance. You'd go to these magazines every month or whenever they came out, and there usually be a section on, at the time, mutual funds were big. They're not as big now, but you'd look at the top 5 mutual funds over the past 1 year, 3 year, 5 years, and they'd say these are the best. And so what would most people do? They'd pick the best ones, right? And, oh, I'm going to invest in that one. It has the best 5 year period. I used to do it, and time again, I'd invest at it, and then all of a sudden it would drop in the standings and other ones would be the best. And I'd
Yeah.
be like, well, wait. And eventually I realized, oh, I was just looking at an optimized test, real history, but still, that doesn't mean it's going to keep being the best system, the best mutual fund out there. There's a lot of like reversion to the mean type things. And that also happens with trading systems. So, just because you have a great looking back test, especially if it's optimized, doesn't mean a whole lot. And
Mm-hmm.
that's hard for people to realize.
Yeah. Yeah. And going back to the software, making it look good. I mean, yeah, they're trying to, sell you their products so that they want you to see great looking back tests with nice green charts that always go up.
Oh, yeah.
But you have to take that a step further and actually do the due diligence and work to make sure, hey, is this back test actually somewhat accurate? And how do I know it's going to perform the same in a real life scenario? Which even if you do it correctly, there's no guarantee it will perform the same, but there's checks that you can do through your strategy factory process that can help you increase your chances of that happening. So
Yeah. Yeah. I
yeah.
mean, the one thing I've tried again and again to try to quantify it, but there's always luck involved in a back test. Sometimes there's a lot of good luck built into it, and that's why the
Yep.
back test looks good. And then but usually when you go live, that luck disappears, and
Hmm.
that's what people don't realize. And so a lot of people will just give up after a couple of days or a week of trading an algo because it lost money, when maybe you just got unlucky that particular day or week. uh, but yeah, you're right. You just have to, there's things we put in place to make sure that before you quit a system, it's really something you should be quitting.
Hmm.
And the flip side, before you start a system, it's something you should really be starting to trade. So we weed out a lot of that. We try to weed out a lot of that bad luck, and get what true performance might be behind that system.
Perfect. I love it. Okay, before we wrap up, Kevin, we're going to do a little speed round here where I'm going to answer or ask you a bunch of questions and just give me either a one word or one sentence answer on
Okay.
some of these questions. And so I've sort of surprised you with these questions.
Yes.
So it'll be interesting to hear your response. But yeah, like I said, just one word or one sentence. So
Okay.
um, what do you think about the future of algo trading? I know it's very vague, but either one word or one sentence.
Possible to be successful.
Love it. Love it. Awesome. Okay. So this one, I like this one. So this is so overrated or underrated? So is this overrated or underrated? Day trading, intraday trading systems or trading bots.
Overrated.
Agreed. Agreed. And that's
That's
from my
easy.
personal experience. Yeah. Um, okay. So these two are a bit more personal. What period of time was the hardest for you where you kind of felt like giving up, you weren't making money at all, and that period of time could be a year or a couple months? Do you remember a time when it was really hard?
Yeah, I mean, I've had years where for most of the year it was just break even or losing money. And when you get into a drawdown or flat period that long, it's extremely hard to see the light at the end of the tunnel.
Hmm. Okay, cool. And my last question was, um, this is overrated and underrated. For me, I'm noticing this a lot, and this is more of a programming language, so it's sort of related to training, but not so much. But overrated or underrated Python?
Uh, I'm not gonna. I don't use it, so
Hmm. Neutral.
yeah. Although I'm my son who's in high school, I one of his summer projects is I'm paying him to learn Python and to actually create some trading bots. So
Cool.
uh, I can't say overrated. I probably would lean towards underrated because a lot of people use Python.
Yeah, I'm noticing it too. It's blowing up over the internet in terms of popularity, but a lot of the Ninja Trader doesn't use it, TradeStation doesn't use it. The only one I can think of that uses it is Quant Connect, which I've dabbled in a little bit, but that's very interesting. So okay, great. Yeah, that was a speed round. So I just wanted to wrap up here. Really appreciate your time, and we want to talk about more about your strategy factory, and we actually have a promotion. So full disclosure, I actually bought the strategy factory from Kevin. I think 3 months ago,
Mm-hmm.
and I've learned so much. Like the amount of value in this course. I'll be honest with you. Before that, or I'd say a couple of years ago, I always thought courses were dumb. I thought they were just stupid. Like you could learn everything on for free on YouTube and Google. And I just actually made a YouTube video about this. But this course really changed my perspective. Like I wasn't a big course guy. I'm like, if I can learn something, I'm only going to try and learn it for free. But you set up the course, it's so organized. Like when I was learning a lot of automated trading system development on YouTube, um, a lot of disorganization, and the quality is so low, especially from obviously different creators, if you will. But
Right.
the strategy factory, like you've set it up in a way that it's like start to finish. Like you talk about even before your strategy factory process, you show people how to code in easy language in TradeStation, and it's so organized in a way that you can be from a beginner to and I'm not going to say you're going to be an expert, but you're going to have all the tools in the right order to be successful.
Mm-hmm.
um So you really changed my perspective. And then the bonuses with it too, in terms of like some of the content you talk about, especially like you even provide software tools like your Monte Carlo
Right.
Excel sheet and your diversificator and multi-opt as well. Like you actually provide software in the course as well. Anyways, I just want to say you totally changed my perspective of courses. There's definitely still
Well,
bad ones
thanks.
out there, but you did it right. You did it awesome. And there's actually going to be a link in the description for your strategy factory workshop, which I can definitely recommend. And I still see value in it. And you actually still do. Um, is it quarterly live streams or like quarterly workshops where you add new content to the course?
Um, so I do. There's usually like 8 live workshops a year,
Mm-hmm.
and what I also do. So that's like an all-day workshop. That's just part
Yep.
of it. And you get the recordings afterwards. And then there's a whole bunch of recorded material. I think there's like 20 or 30 hours of just supplemental information. And then I do occasionally do like live Q&As. I haven't done one in a few months now, but and then the other thing too is I'm constantly adding to the course. So something that's interesting is I've been teaching the base course since 2014. So it's coming up on 8 years now. When I started doing it, it was just the 8 hour live class, and that was it. Now, and you can attest to this, now there's a ton of other information in there, because what I've done is over the years, people just ask, hey, I'm having trouble with this. It would be nice if you did a little video on that. Oh, okay. I realize other people would want it. And so I just keep adding to it. So uh, it turns out now there's like a whole, somebody described it as like a whole college like level course in trading,
Yeah.
algo trading. Um, so I keep adding to it as time goes on. That's definitely part of it, but probably of everything, I think the biggest benefit people get is they're able to email me. So I teach this course. I don't have this staff of 20 people with 10 support people and sales people and stuff. It's just me. That's
Mm-hmm.
it. I keep it small on purpose because I want to be able to work with everybody who wants to take the course.
Mm-hmm.
And I've literally gotten one person. He was in Brazil. He's now working for he was working for a hedge fund. Now he's working for an energy company. He actually sent me I think he holds the record, like 800 or 900 emails over the course of probably a year or more, just asking questions and those kind of things. And but I answered them, whatever ones
Mm-hmm.
I had to answer, I answered. And yeah, it's worked out pretty well for him, I think. But that's a big part of it, where some of these courses, one maybe the educator's a little sketchy, like
Yeah.
promising you the world kind of thing. But other than that, you sign up, you might never hear from this person, and you might never even be able to. So I think that's important because, obviously my background, we talked about it, I have some verified success out there. I'm not saying I'm the world's greatest trader, because I'm definitely not, but I know my way around, and I can help others do that. And I think that's a big part of the course.
Mm-hmm. And yeah, just going back to the email thing. I mean, every time I email you, you respond in at least like 2 to 3 hours, like very quickly. Sometimes instantly. Like sometimes I'll send an email and then like check my phone. Oh wow, Kevin already responded. So
Yeah, my
um
wife says I spend too much time in front of the computer, but I work from home. And
yeah.
so if I'm here, I'm answering. And sometimes I wake up. I have a lot of students in Europe,
Mm-hmm.
and so for them, they'll send me an email in the morning. I'll get it 2, 3 o'clock in the morning my time, and sometimes I just happen to be up, and so I'll answer. And I think I surprise people more than not. But I really try to be there for people. I think
Yeah.
that's the key. I am really clear that I never guarantee anybody success, because what I do guarantee is I'll give you the tools to get there, but it's up to you.
Mm-hmm.
uh, you know, and it for somebody who buys the course and then well, oh man, I got to spend 5 hours a week on this. I'm not doing that. They won't be successful. But the
Mhm.
people who are dedicated and enjoy the puzzle of building strategies and, get a rush out of that, which I still do, uh, those people will likely be successful. Uh,
Mhm.
but it's definitely hard work, but it's like anything else. I mean, I always tell people this: think about anything you've ever done in your life that came out good, that was worth doing in the end. You had to work at it. You just didn't
Yep.
wake up and become a pro basketball player. Steph Curry, they won the NBA championship yesterday. I guarantee you he spends tons of hours at the gym just shooting over and over again.
Mhm.
Yeah, he's got talent, but he works at it. And that's what anybody who wants to be a successful trader, that's what they got to do. They got to work at it.
Absolutely. Yep. And one of the good things about, NBA is a little bit different. There is a physical aspect, but with trading, I mean, it just comes down to putting in the work. And as long as you have computer and internet access, as long as you put in the work, that's kind of all the requirement you need. It's going to take a long time to get good at it, but in terms of like the barrier to entry, it's relatively low. I mean, there's a couple more things like capital and stuff like that, but that's awesome. So once again, there's going to be a link in the description below for your workshop. And once again, I purchased it. It was very well worth it, and definitely recommend it. I've learned a lot, and Kevin's, you're always there to help me when I got emails on specific questions about, walk forward optimization, or hey, I'm running the Monte Carlo with these trades with a portfolio. What should I do?
Yep.
You've helped me a lot, so really appreciate it. And I think that's it. That's all. We covered a lot today. This was awesome. Thank you for your time on this Friday, and I appreciate it, Kevin.
Great. Well, thanks. It's been great talking to you, Jacob.
Awesome. All right.